good
What's up,
to
guys?
go.
How's everyone?
What's up? Doing great.
Awesome, possum. Let me set everything up. Give me like 30 seconds.
You got it.
How's everyone's morning?
Pretty good. Made some
Good.
money back that I lost yesterday, and then I gave 200 of that back.
We won't talk about it though. It's all
We
right.
won't talk about it. Green is green.
Basically, let's be real. All right, so cool. Can everyone see my screen?
Yeah, we can see.
Cool. Let me just put the chat up as well quickly so I can see that. I'm so new with this platform still. Bear with me. Here we go. Awesome. Cool. So before I start, hello, ladies and gentlemen, and gents and ladies, fellow traders, fellow degens. All right. So do me a favor, type in the chat if you've ever risked more than 60% of your account in one single trade. 60%. We got at least about 10 people so far. I like the honesty, guys. All right. So good thing we're going into risk management and investing plans today, then. All right. All right. So what an investing plan is, an investing plan consists of an objective, a watch list criteria, entry rules and exits, money management rules, and routines for traders to follow, right? So a lot of people come into the market and they, for whatever reason, risk 40, 50, 60, 70, sometimes even 100% of their account in one single trade, which if you think about it, you never really want to basket all of your money in one trade because, yeah, I mean, it could go your way, but let's be real here. The market might not be in your favor that specific day. And if you risk, say, I don't know, say if you have a small account, right? We'll do an example, $1,000 account, okay? And you put a full 1 grand into XYZ stock and that stock just tanks like an hour later. And if you don't practice your correct risk management and have an ample stop loss in mind, say 10, 20, 30%, instead of losing $200 to $300, you end up, one, not cutting it, or two, cutting it way too late. And you end up losing half your account in one day. And you basically already are, you're just starting fresh as a trader with $1,000 account. And then a week later, you're already down $500. So that takes a lot of money to get back. If you think about it, like, yeah, sure, you can deposit more money in, but you're trying to be not do that. You're trying to actually grow your account through money into your account already, right? So that $500 is going to take a while. It'll probably take at least a few weeks just to make back. So I like to have a lot of criteria stuff. A few criteria I look for is, what did my budget allow? If I'm on a small account, if I have $1,200, or excuse me, $1,000 to $2,000 account, I'm not looking at Amazon. I'm not looking at Tesla. I'm not looking at Google. I'm not looking at any of those stocks because my budget does not allow me to buy any of those stocks. That's okay. You can make money on small cap stocks and medium cap stocks. It's perfectly fine. So think about that, right? Never risk more than what you can lose. So if you have a small account, which half of the people in here potentially do, set a watch list for yourself. So I can post my watch list, my small account watch list after this, but a few tickers that I like to watch every single day: AMD, Disney, Riot, bank stocks, airline stocks. Like you can make money every single day off liquid moving stocks, even if they're smaller or medium cap. Perfectly fine. You do not have to play just because other people are playing, Amazon or Tesla. You don't have to, especially if your account size cannot handle the drawback, because premiums for Tesla and Amazon, they can move extraordinarily quickly. Like you could be up $100 and then 10 seconds later you could be down $500. Like it's that quick, right? So that's one criteria, what my budget allows. Another one is before you get into a trade, understand what you are comfortable losing. So set either a mental stop loss or a physical hard stop loss, depending on your trading strategy. If you're a swing trader, a day trader, or a scalper, you have different risk tolerance. I like my rule of thumb personally is about 10% for scalpers, depending on how heavy you are, anywhere from 5 to 15%. But 15, if you're going really heavy, that 15% can go against you pretty quickly. For day trading, depending on your personal tolerance, yet again, anywhere from about 10 to 25%. Swing trading, anywhere from about 25 to even upwards of about 40 to 50%. If you are swinging long term, like a few months out, you're okay with going about 40 to 50%. But if you're swinging like 1-2 weeks, then I'd keep it more down to like 25 to 30%. So that's what you're comfortable losing. If it does not go your way, if the market breaks down, the structure breaks down, that's okay. Take the L, and it's better just to take a small loss, like a 20% loss, than being stubborn and basically losing, 40% loss. All right. So what percent of your account will you be investing? So like I said in the beginning of the whole lesson, don't risk 60% of your account in one trade. Always basket your trades. So say, for example, if you're on a $1,000 account, for another easy example, try to split that up in 4 different, sections. So like 250 per trade, right? Don't put $1,000 in one trade. Don't put $500 in one trade, because that way you're only trading, your odds are only 50%, right? So like if you're only putting 2 trades in, those 2 trades have to work in your favor or you're going to lose money. But if you put different eggs in different baskets, and if you have 4 different trades of that $1,000, your likelihood of success is a lot greater. And especially if you are practicing correct risk management and cutting your losses quickly and letting those winners ride, that's great, right? So you have a larger percent chance of winning. And for whatever reason, you're not, if you do lose, you're not really losing that much money because you only put in 250. So at best, you'll probably lose, let's say $100, give or take, for that risk, that trade. But if you put in $1,000 for one trade, I mean, it's a lot more of a risk to you to potentially lose, right? So that's just something to think about and keep mindful about. For your target percentages, right? It also it does depend. It really depends on you. Like as a scalper, scalpers are in usually 1 to 5 to even 10 minutes a trade, so they don't care about percentages that much. They care about very small moves, maybe 5, 10, 20, 30% moves. They don't want large moves because they're in and out all the time, right? So that's a scalper. For day traders, they can go a little bit more wiggle room because day traders hold for a few hours per day potentially. So you can go upwards of about 50% is a good profit target. Swing traders, since you're holding for longer, and especially depending on like where you get in at, if you get in off a support, you can go for more than 50%. But as long as you have a decent profit target in your mind and you set your stop losses and your profit targets in your mind before you enter a trade, that's very advantageous. Also, try to have core stocks. Like a lot of new traders, I've realized, kind of just come into the market and get extraordinarily overwhelmed because, yeah, there's hundreds and hundreds and hundreds of stocks you can trade per day. And they're just flipping back and forth, flipping back and forth, flipping back and forth because there's just so many opportunities. That's why I like to keep a little core, what I know as like a core stock watch list. So just figure out stocks that are highly liquid and are favorable to trade. And hopefully make sure they're in different sectors. So if one sector is not doing very well that day, you can have other sectors to potentially look for, and just keep 5, 10, 15 stocks on your core watch list per day and just flip through them before market open. See how they're doing, see what their pre's looking like. If they're looking well, boom, you don't have to, look everywhere else. You just have your core stocks. Also, remember your expirations and strike prices. So sometimes people buy like a weekly strike price, a weekly expiration, excuse me. And for whatever reason, they think they can get like $20 move in a week off of really small stock. Like, let's do a quick example. Disney's ATR, which is average true range per day, is about, I think, $3, give or take, right? So if they buy a weekly on Disney and they're like, Disney's gonna moon, it's gonna go up $20 this week, I'm gonna buy a really far out of the money strike, this is gonna, be awesome. And then most times their contracts just expire worthless because you're not buying the correct expiration. You're not buying the correct strike price because you didn't take into account the actual true range of XYZ stock per day. Now, instead of buying a weekly for Disney, if you bought, say, 2, 3, maybe 4 weeks out, yeah, sure, you could probably take $20 off that and make a killing. But if you bought a weekly and you bought a really far out expiration strike, then your contract's going to expire worthless like 75% of the time, unless Disney has some extraordinarily massive news and a huge catalyst that can cause them to run $20 in a week's period. Your contract's going to expire worthless. Sorry to say, like, it sucks, but as long as you buy ample time and buy the correct strikes when you take your trades, that's awesome. It's very, very advantageous. I like to, when I swing, if I actually swing, because I'm more of a day trader now, but when I swing, I buy time. Even if I think the move is going to take 1 week, I will buy 2 weeks, because just in case. You never know what the market's going to do overnight, especially in the market today. Like, the market's extraordinarily choppy and we're at all-time highs. Who's not to say, on Monday morning, we go 408 SPY to 400 SPY and the market tanks. So that way, I actually give myself a little bit of wiggle room with expiration time, and I can still, have some wiggle room, because if you buy that weekly and the market tanks overnight, well, your contract's burnt to crisp. Like, it's not gonna come back, unfortunately. But if you buy a few weeks of time and you give yourself some time, that's awesome. I kind of already explained stop losses. Just a little quick note. I'm not sure if everyone knows this about stop losses, but hard stop losses are seen by market makers on the tape. So if you ever have been experienced, say, for example, you set your stop loss at exactly 20%, right? And then 20% comes and your stop loss gets hit, and then magically the price action just bounces and reverses off your stop loss. That is the market makers purposely hitting your stop loss and just reversing off of it, because they can see you on the tape. That's market makers just pretty much screwing over retail traders, and it happens every single day. If you look on SPY, it happens every single day. Every single day, the market makers will get your tape, bounce off your stop loss, and keep going. So that's why I'm not saying you should or you have to do this, but personally, I do not use hard stop losses. What I do is I mark on my charts before I get into a trade around, a zone. If the zone breaks under, that's basically my stop loss. That's where I should get out. So that way the market makers don't see my tape and I can get out myself. That's just a little thing about stop loss. Just kind of like a mental stop loss and mental profit taking. Also, how many trades do you want to have open at one time? If you're a new trader and you can't, handle flipping back and forth or having multiple trades open at once, don't take multiple trades. Take like 1, 2, or 3 trades at a time and kind of just, monitor them, because sometimes new traders get like gung ho in a sense, and they kind of over trade, and they have like 10 open trades at once, especially day trades. Like, yes, trailing stops are seen on the tape. To answer your question, and where I was a lot of new traders have like 5 to 10 trades open, day trades sometimes at once per day, and they get extraordinarily overwhelmed. And sometimes they just, don't take where they should, don't cut where they should, don't take profits where they should, because there's just so many open trades, they get overwhelmed. So don't do that until you're actually like very, very comfortable. I'm not saying you can't take 5-day trades at once and have 5 open positions at once. You can do that, but if you're a new trader, don't do that. Take 1, 2, or 3. Like, you don't have to overwhelm yourself, because if you have that 1 banger or that 2 bangers, you're pretty much already done for the day. You don't have to overtrade, because another thing people forget is commissions. Especially if you don't have your commissions lowered. 10 trades, that's $13 right there just on commissions alone. If you do that, every single week, 10 trades a day, those commissions really, really add up. People don't think they do, but commissions add up exponentially, unfortunately. Investing plans are very, very important. So, yep, he gets it, 3,000 in commissions a year minimum. Wouldn't even doubt it. Wouldn't doubt it at all. So commissions are deadly, and that's why you do not need to overtrade. Because all you really need is 1 or 2 bangers per day to meet your profit targets, and then that's it. You don't really have to trade anymore. You can just step away, do whatever you want to do for the rest of the day. Boom, boom, done. You don't have to sit there 5 more hours after you have your profits already locked in. Are there commissions for cash accounts? Yes, correct. There are commissions for cash accounts and margin accounts. Anyone have any questions about an investing plan? Anything at all? Yeah, a lot of people overtrade when they first start trading, because they think, oh, if I put on more trades, I can make more money. But that's really not the case. You really just need a few ample setups coming to your way. If the setup is A plus, then that's where you should take it. But if you just take pretty much any single trade, even if it's not A plus, that's over trading. Like, you have to wait until trades come to you that are ample potential setups. Don't just take garbage trades just because you want to trade that day. Like, you don't have to trade if the setup's not coming to you. Does anyone have any questions before I move on? Awesome possum. So, how to take a loss like a champ. A lot of people do not like to take their stops. They're very, very stubborn. When, say, 20% stop comes around, 30% stop comes around, they're like, no worries, it'll bounce here, no big deal. And then that 30% stop ends up coming to 50% stop, and you're still being hopeful. No big deal, diamond hand this bitch. That 50% stop ends up going to 70% stop. So instead of taking a small loss of 30%, you're actually taking a loss of about 70% or higher. Attaboy, Danny, I like that. But seriously though, don't do that, because instead of taking a very tiny loss, it sucks to lose. Please don't get me wrong, it's not very ideal, but just think about it. Like, take a step back. If you think about it, if I don't take a stop here at 20%, then potentially I'm going to take a stop at 70%, which is a larger amount of money than I need to even risk. It's all like, you can get back in. Like if you take a 20% stop and then you wait a little bit, you could potentially get back in. Like you don't have to just hold it and, wait to see if it, bounces back up. So take a small loss instead of a large loss. Shoulda, coulda, woulda, a lot of traders use. Oh, I should have taken profit here. I could have taken profit here. I would have did this if I known it at the time. Those words are detrimental. Those words are horrible for new traders and traders alike. They really mess up your psychology and your mentality. Try to take shoulda, coulda, woulda out of your vocabulary. Try to take the ifs. If I did this, if I did that, I could have did this. Just try to take that out. Take that completely out of your vocabulary, and instead focus on words such as I shall, I can, I will. Right. So I can make more next time. I will make more next time. I shall take profit here. I shall cut here. Isn't that a lot better? Doesn't that sound better already? Don't think about the past. The past has already happened, right? Learn from it, write it down, journal it. It's fine. And learn from it. Just don't worry about it. That's all you got to do. Don't think about the past. Don't say coulda, woulda. Instead, say I shall, I can, and I will. Also, even if you do get out for profit, right? If you end up getting out for profit, like most times traders think, I sold here for, say 20% gains, and then I just kept running and running and running. I could have taken 100% if I didn't cut this. Well, yeah, you could have, but you didn't, which is fine. You still gain profits, right? Don't scoff at profits, even if it's a little bit of profits, you still made profits. Awesome. You made profits from your own home in under an hour of time. Like you don't have to scoff at profits. Like, yeah, it might suck that a banger, happened right after you sold, but still, you could have lost it and you didn't. You still at least, profited. Little gains add up. If you take $50 a day, 5 days a week consistently, that's almost $1,000 a month. That's $1,000 extra a month you make from trading at your own home on the side. So it's not really bad for little gains. Just think about the bigger picture and think about consistency. Anyone have any questions? So just to go back to the investing plan quickly. So you also want to look at the overall market before you take a trade. You want to check SPY, you want to check QQQ, you want to check NASDAQ, right? You always want to see the overall market before you get into a trade. Because if the overall market is going bearish and you're getting into a bullish stock, it's not going to happen all the time, but more times than not, you're not going to do very well because the overall market is going opposite direction, right? You always want to know how the stocks move. Learn how each stock moves because every stock moves differently. AMD moves differently than CAT. CAT moves differently than Apple. Apple moves differently than Bank of America. Like every stock moves differently, and you have to understand that. You also want to understand and know where the major support and resistance zones are before you enter a trade. You always want to have your plan etched out before you get into a trade and understand that if your plan doesn't go according to plan, it doesn't go according to what you did your due diligence on, that's okay. You at least made your plan and it just didn't go your way. Just cut it and move on. Also, another thing I forgot to mention about the investing plan, instead of risking 60% of your account per trade, I'd say truthfully about 20% of your account per trade max. So say if you're $1,000 account, try to put $200 on per trade. Don't put on $500 plus. So does anyone have any questions about that? I'm going to do a really quick example of charting, and then I'll take any more questions anyone has. Anything else quick before I switch over to the other screen? Oh, of course. I'm just going to show like a quick market structure breakdown and where you should get out if you're in for calls really quickly. So can everyone see my screen by chance? Should be on the chart Riot. Cool. So let's just do a quick example of Riot today. So pre-market highs and lows, we'll just chart them out real quick. There's the low. Oops. There's the high. So say you see the gap up and you get in for calls. You can either get in for calls over the moving averages, or you can be a little for a more aggressive play, or you could be safer, get over the high. Say if you're getting calls right here, right? And it comes up, it's rallying, you're like, holy crap, it's going to keep going, it's going to keep going. And then instead of hitting your profit target of almost 52, it rejects the 200-day moving average and just keeps selling off. So you have two things to do right here. You either sell right here for a very quick loss, or you hold it until under the first breakout candle. That is when that's when your candles break down. Because if you think about it, markets move in structures. They go up, they go down. They breathe, and this is a structure. So the market broke the structure, the price action broke the bullish structure, and it fell bearish. So that's a bearish breakdown structure, and it's another confluence that all the moving averages cross downwards, which is another confluence, right? So you should get out right here, but some people like to be stubborn and wait for a potential bounce at the support, right? So here is your first take your loss at. You should take a loss here for very quick. Here's another loss that you should take for relatively quickly and still not lose that much money. Here's when the stubborn traders come in. Oh, so it's probably going to bounce here at the support, right? No big deal. I'm just going to hold it. No big deal. Well, if you held that, what would have happened? You would have lost another, what is that, 50 cents. And what if you got faked out here, right? What if you sold way at the bottom and just sold here? Like if you ended up holding, sure, you potentially would have made some more, you potentially would have, not lost that much money, but you didn't see this at the time. None of this you would have saw. You wouldn't have saw any of that. You would have seen this. This is all you would see. So you probably would have got faked out and like, oh crap, I'm going to take the loss here. So that's when understanding when risk management comes to play. Because like, if you think about it, if you took your quick loss like up here and then ended up getting back in here, you would have bought a really great dip buy. Like that's a good dip buy. Even if you took a loss here and then went bearish here, you would have potentially rolled down puts from here all the way to here, made all of your money back and then more on your bullish trade that lost. You would have made it back on puts, flipping your bias, and then waiting for a little consolidation and a break up. You could have entered back here, right? And then you could have bought the dip and still made more money. So that's great to know about, kind of like a little spiel about market breakdowns and where and when to take stops. Because if you think about it, broke down. It clearly broke down. But sometimes people get really like stubborn and they don't realize it or notice it that the the pattern and the price action is breaking down. And they could have cut here 50.10 instead of 48. So they lost another $2 just by being stubborn. If that's a little quick example. Does anyone have any questions about this? I can do another example if anyone has, confusion. One more. Awesome. Give me a ticker. Any ticker you want. Cool. All right. So we'll do CRM. Oh, geez. Are you saying to do Baidu or are you just calling Baidu out? All right. We'll look at Baidu. Oh my. Even I like it. So you do a little support and resistance. There's a little support level. And there's another support level. There's some resistances. And there's another resistance. Okay. So say, let's do play by play, 5 minutes. Okay, you see the massive gap down, and this is your indication for potentially sure, I'll do PLTR next for you. So a gap down, so that's your indication immediately. That plus a large selling volume coming in beginning of the day. That's another quick tip. If you see large selling and or large buying volume right at the beginning of the day, it basically sets you up for how the rest of the day is going to go, right? So you see large selling volume right at the beginning of the day, and then, well, what's it do? It opens up right here at 223. Large selling volume, still hours later, it's now down to 218. Right? So that kind of a little indication to look for in the beginning of the day, large selling or large buying volume. So this is clearly a bearish play entirely, right? So gap down, your moving averages are crossing down, so that's a bearish sign. It came down in the beginning of the day, tested support, respected the support right here, right here, and then tried to rally back up to the resistance, did not break the resistance. So you have two options here. You could either not touch this play if you're thinking it's going to be bullish, or you could flip complete bear mode and ride it down from the resistance all the way down to the support level, taking a few dollar trade. So then you could take profit right here, or if you have multiple contracts, what you could do is trim it. You could trim it here and then let one or two contracts ride, which is known as the runner strategy. And then you could take even more profit. If you took it from here, you could take it from right here. You could saw the reversal candle, which is right here. Like Mario said, it's reversing or starting to try to reverse. So that's a reversal candle right there. And then it could potentially see from 219 to potentially the resistance right here for first profit target. So, excuse me. So yeah, you kind of just make your levels, your pre-market highs and lows, see what it's doing, and then just act accordingly, just for extra confluences. Let me do PLTR now. PLTR has been a little screwy over the last few days. Really bearish. Tried to do some stuff today because of news coming out next week. They're doing demos and whatnot. So you just go into 15 minutes, set some pre-market highs and lows. Another one's right here. So then you just do right there and right. If it works, there we go, right there. So if you look at it, starts in the beginning of the day, touches the support it made over in pre, rallies through that, rallies through the pre-market high, crosses the moving averages here. So that's two confluences, large amount of volume coming in through the beginning of the day. That's another confluence. So it rallied really heavily right in the beginning of the day. It stalled out at the first resistance, which is a previous day resistance right here. Then it ended up going back a little bit down, respecting the moving averages though, respecting the moving averages and the support it made prior. So then it tried again, couldn't really do much, and then it fell again. So then finally, the third time, it finally breaks through that resistance here, and it makes a new high today. And then the buying kind of just wasn't very, the buying pressure wasn't enough to take it back higher. So it potentially will go all the way back down to the support again down here. And then maybe at the end of the day, try again to that resistance. So PLTR could be a good swing depending on how it sets up at the end of the day. But just kind of look for those kind of confluences. You always want to set your pre-market highs and lows, see if it breaks it, which it did. And then you always want to set your previous day highs and lows to see if they break it or respect it. In this case, at first they respected it and then broke it the second time. And then they had a moving average cross down, which is a bearish signal. But on the 5-minute, if you look at it, it's starting to form a bullish candle, and buying pressure stepped in right here. So this could potentially make a new high at the end of the day. So stay tuned for PLTR. Any other tickers you want me to kind of just run down really quickly? MGM, okay. MGM, I usually don't follow. Let's check it out. So what's MGM been up to lately? So I like to go on the hourly, see what it's been doing the last few days. So that is a support. That's a new high. That's the pre-market high. And another zone right here. Then that's a low of day today, which acted accordingly to yesterday. Then make yesterday's high, or the pre-market high, excuse me, which acts as a few days ago's resistance. And then you just want to kind of chart today's zones. So that's a zone, 1, 2 touch, 3 touch, and 1 touch, 2 touch, 3 touch, right? So those are some quick levels to look for. And then if I go back a little further, nope. This will be considered potentially something to look for, but it's not really a heavy level. So then you just go back down to the 5-minute, see what's popping. So yesterday I tried to rally and made a new high of 42.25. Then in the pre-market and beginning of the day, kind of just fell all the way down. You had a moving average cross down. You also had a lot of selling volume coming in the beginning of the day. And then it kind of respected the first support, had some buyers come in here. The buyers were not strong enough. So then the selling pressure came back, tried to respect the second support, respected it for a few minutes. Well, yet again, the buyers were not strong enough. If you look at these large wicks, these are selling wicks. That's a large selling wick right here, right? So then buyers were still not strong enough. And then they just fell yet again on the support, but they finally found support, which is a key resistance level day prior, right? So it had to have a lot of volume at this level. And then a few days later, well, not a few days later, a day later, rather technically, it respected that same level that it broke through. So that resistance turned into a support, right? So found some support finally after a pretty decent move down, and then tried to move its way back up, got stalled out here a few different times, stalled out 3 separate times. The buyers could not take over entirely. And then the sellers came in and it's been choppy ever since the rest of the day. So this one can go either way. Stay tuned until power hour, but it's just been choppy ever since basically 11 o'clock in the morning. So this one could go either way. But that latest 5-minute candle, that's a selling pressure candle. So if this support of 41.45 cannot hold by the end of the day, we could potentially see 41.15. Or if it can hold, it could be a potentially decent swing to look for 42 or 42 and say 42.75. So that's MGM. I'll do Disney quick. Disney is just choppy as hell, just looking at it already. But let's do some levels for it. Okay, so Disney. So we look at previous days. So it's clearly a support. This used to be a resistance level right here. Has some trouble breaking this 180, basically 186 region. Finally broke through it yesterday. Well, not yesterday, on the 1st, excuse me. And then acted as a support, then rallied off of it. So we do the pre-market high today. That acted as pre-market high, which was a previous resistance level. Now a support, but now a resistance level. So it kind of just moves back and forth, right? So then you make another level up top here, which would be another heavy level to look for. So Disney doesn't like to go above 190 at the current moment, but it likes to stay around the 180 to 190. It's been choppy for a bit. Right? So then after you make some levels, you kind of just go intraday, mark them again. So I made it right here and I made it right there. And finally found support right here. And I'll make another one. Yep, right there. So then we go to the 5-minute, and beginning of the day had a decent bit of selling volume. The buyers tried to push it up in the beginning morning rally. If you see that large wick right there, that's a buying pressure, that large buying wick. And then it went from 186.80 all the way to 187.60. So almost $1 move in the morning. And then ever since, it's been pretty sideways and bearish, right? So respected that resistance from previous day, bounced right off of it, went all the way down to 186.40, tried to come back up here. Buyers were trying, sellers were like, no, piss off. Boom, boom, boom. Respect it. The previous support, which is nice. Then tried one more time, making a little higher high. Sellers were saying, nope, sorry, pal. Brought it right back down again. Buyers are picking it right off that support. Sellers are like, nope. And then brought it right down here at the previous day from a week ago's lows. And then finally, now it's starting to pick back up. So our next potential profit target would either be right around this region at 187.20 or 187.50. If those levels can hold and break, Disney could be a decent swing. If they cannot hold and break today, we can potentially see downwards of 186.40 or 186.20 again by the end of the day and or next week. So those are just some levels to look for Disney. So you always want to make pre-market highs, lows, and then look in the previous days resistances and support zones, and then kind of just act accordingly. Just play off your volume, play off those levels, and kind of use your moving averages as extra confluences. Don't rely heavily on them, but use them as extra confluences. Yeah, sure, I'll do chop real quick. Shop has been killing it lately. Shop was killing it the last few days. So let's do 2-hour levels real quick. So it's already right there on a resistance level. It has to break this region. If you look, this is a February resistance. So it has to break that. Then you make some extra, see what else we got here. Nope. Yep, right here. So then there's some quick levels to look for the larger time frames. Then we go, that's another one. Then we go to the hourly. That was the high of yesterday. So you mark that. You always mark the highs of yesterday and you mark the lows of yesterday, right? So those are the highs and lows of yesterday. So then those are just some levels to look for quickly. Then you go into the 15-minute. How do you chart for all-time high stocks? I'll show you in 1 second. Give me a sec. So, and then 15-minute kind of look, see if you find any other levels quickly. So this would be, oops, excuse me. This would be another one right there to look for. And like I said, this has to break. If this level does not break, we're going to reject and we're going to see the next level down. So we could potentially see a $10 move down if this level cannot break at the end of the day. So quick levels would be, if you see it, it kind of rallied heavy today, gapped up. If another quick thing, if people don't understand, gaps usually get filled. Not all the time gaps get filled right away, but more times than not, this gap will get filled before our next leg up because market does not like to be imbalanced. And this is an imbalance in the market, just for an FYI. So rallied heavy, found a resistance here at 12 from the last day's high, respected it, bounced off of it. Still technically a buy signal because it never went underneath the EMA. This is an 8-day EMA, never went around below it. Basically respected the 8-day moving average half of the day. If you didn't sell here, you could have picked it up right here and made a $40 gain move. So this has been a great trade today. And then respected that, had some selling volume, but this is profit takers. This isn't really, a selling pressure. This is profit takers taking their profit, wanting some money, respecting the 1200 level, bouncing off the 1200 level, and then kind of just making another move up. This is a 200-day, or excuse me, a 50-day moving average, the blue. This is a 21-day, the yellow, and this is the green, just for quick reference. So I had a little bit of selling pressure here of sellers, then respected. This is a bullish reversal candle right here, respected it, went right back up, and now we are at a key resistance level. This key resistance level has to break or it will fumble back to potentially right around here or right around here. So that's shop. So what's the stock at all-time highs right now? What stock were you thinking about? Okay. So let's just say Microsoft, right? So obviously Microsoft has been killing it recently, massively killing it. So how do you know levels to look for, right? So the levels to look for, you look for what is known as a Fibonacci level. Let me pull it up real quick. So there's a lot of different fibs to look for. The main ones I like are Fibonacci extensions and Fibonacci retracements. So in your case, Fibonacci extension at all-time highs, you make it from the low to the high of the candle, right? And then you make some levels right about there. Make sure they're pretty accurate so you can get some good gists, right? Then you go back down, then you see some levels. So clearly it stopped at the first level, and then your actual profit target to look for potentially is here, right there. So why do I think it's going to be potentially right there, right? The 0.618 Fibonacci number is very, very strong. So if you can get, that'll be my first profit target. I mean, these will be soft profit targets, but my first actual profit target would be a 256.50 region. That's my first profit target for Microsoft when it comes back up, because it has, if you think about it, it has rallied pretty heavy and it has a massive gap to fill. So if this region cannot break above the whole, what is this, 255 region, if that can't break, we're going to retest down to first level. We're going to retest this here, 254. Then we're going to retest down here at 252.50. Then if that does not hold, we're going to be filling this gap at 250, right? Yes, I purposely made my level, my fib level on a higher time frame, right? And I'm just showing you the actual like example on a lower time frame. Try to make your fib levels above preferably a 4-hour time frame, just so you can get the big picture of everything. Don't use fib levels on smaller time frames personally. So just to finish the example of this, yeah, sure, I'll do it on SPY. Give me 1 sec. So if this cannot hold right up here at 255, these are some levels to look for. First level, second level. And if this cannot hold, this is technically the third level right here at the previous resistance. And this is the gap fill down right here. So at that case, we would potentially then, after filling this large gap, see 256, right? Because stocks go up, but they only go up for so long. This has been killing it for days and days and days. So just be wary of this gap here. But that's how you use a fib extension tool. Let's do the same thing on SPY. So SPY has also been killing it recently, as pretty much everyone knows, but also be wary that it has 2 gaps to fill. Well, technically 1 gap and then 2 gaps right here. That's the second gap. So this example, I'll use it on the daily time frame. So same thing. It's called the Fibonacci extension, right? Larger time frame, Fibonacci extension, low wick, high wick. Mark it over. Make sure it's pretty accurate to the high, which is right there. So then those are your levels to look for. Go down in the smaller time frame to look at it a little bit accurately. All right. So if you look at it, it respected the first region. It respected the 410 region right here. So your first actual profit target would be around the 411 region. So if this can break in power hour at the 410, right? If it can break 410, potentially we could see 411. I'm not saying it's going to happen, but 411 is possible for your first major resistance, first major profit target resistance level. So 0.618 is a very key fib level. The next key fib level is 1. That's another key fib level. And another one after that is 1.618. Those are some key fib levels to look for. I'm not even going to really tell you about like these ones up here because I don't think SPY is going to get to 415 right now. But after 413, we could see this one, and this one. So at most, we could see SPY 417, but we'll probably not see that until this massive gap is filled. Once this gap is filled, we could see some, a new leg up, but I think we're going to stall out here around the 410, 411 region, and then have a sell-off down. So sell SPY 420s for 421. Hey man, that's all up to you. It's completely up to you. If you want to do a put, I'd recommend waiting until the end of the day, seeing how it goes, because it could potentially respect and keep going higher to the 410 region. And then that would be a great to open a put in. Like you could open a put for say 2 weeks out and you could look for the gap, like, right. You could sell the gap at 400 to 403 because it most likely will fill that gap within 2 weeks. So that's something to think about for your puts. Are there any instances of examples of gaps not filling? Yes, but they don't happen 100% of the time. Like let me see if I can think of one. I think Disney had a massive gap that it didn't fill yet. Let me see. So like for down to here, I mean, that has not been filled yet. It could be filled at 170 for Disney, but it doesn't have to be filled all the time, right? The market likes to do your balances. Like it doesn't have to be filled right now. Like this Disney could come down to 170 in 3 weeks or 3 months. Like, like it doesn't have to be filled immediately, but more times than not, the imbalance of the gaps in the market will be filled sometime, not all the times, but most of the times. So especially with SPY being extraordinarily extended like this, like SPY is, they rallied for, let me look exactly. Hold up. So they rallied from, let me just get rid of all this stuff, all the fluff. Okay, so you do what's known as a date and projections. So they rallied almost 7%, 26 points in 2 weeks. That is extraordinarily extended, very, very extended. This is not the time to get into more calls. This is the time to think about puts because they're very extended, even over the EMA. Like if you look at the EMA is sitting right at 404, which is right in that gap fill. So that's just something to think about. So I wouldn't be thinking calls right around here. You can scalp some calls, maybe day trade some calls, but I wouldn't really think about swinging calls until this gap is filled. Once this gap is filled, by all means, swing some calls, but I wouldn't swing calls right now when it's very extended like that. Yeah. SPY is hella extended. It's like it's disgustingly overextended, and it could very well potentially either in power hour run to 411, 410 again, or it could potentially just tank down to here, 48 or 407. And the lowest level I'd probably say for today, giving how SPY is acting today, I'd say probably about 406. 406.50 created a demand zone the other day. So if 408.50 doesn't hold, 407.75 was next. And then after 407.75, 406.50 has a demand zone there, which is basically buyers sitting there. So if that can't hold, then we're going back down to 404. So those are just some quick levels to look for SPY. Does everyone understand like what type of things I look for and how I chart my stuff? Anyway, any questions? Anything at all about the whole lecture? Don't feel, I won't bite. Awesome. Glad you learned something. I appreciate you guys as well.
All right, thanks, Scrub.
Of course, I'm going to be hosting a few more next week. So just look for that. And I thank you guys for letting me have your time. And I hope you learned some stuff. But I'm going to leave it over to Trent now. And I appreciate you guys again. And stay safe and have a good weekend.
Terrific. Thank you, Scrub.